Jindal Saw, an exceptional story of scaling the peak and a free fall in quick succession. A company manufacturing pipes and related items with a strong manufacturing facility, very sizable revenue, a mid-cap company in terms of market capitalization. SAW Pipes dominates the product mix of Jindal Saw. Other products, including seamless and DI pipes, lend diversity to its comprehensive and competitive offerings to the market. Caters to the needs of a wide spectrum of industries with an extensive coverage of transmission of oil, gas, water, and power. Infrastructure projects of various sizes constitute the key business segment of Jindal Saw. Exports of Jindal Saw form about 10% of revenue. It has a capacity of 2.45 million tons per annum, and its capacity utilization currently is around 75%. Seamless pipe capacity is under expansion. The company has also announced investment proposals for setting up pipe manufacturing plants in the Middle East. Sizable and unchanged holding by the promoters across last 4 quarters is an expression of confidence in the future prospects of the company. This is also a strong positive for Jindal Saw. A robust order book close to 1.9 million tons. Strong demand from government water initiatives. In spite of operational hiccups due to delayed payments from EPC clients, Jindal Saw is looking for strong improvement in performance and market sentiments. The revenue for FY25 showed a marginal fall, largely due to maintenance shutdown and also due to deferment of export shipments affected by geopolitical conflicts in the Middle East North Africa region. However, the company did benefit from India's infrastructure boom. Rising operating profits in FY25 was a reflection on the exceptional operational efficiency and successful margin protection measures. Early January 2023 starts an upmove, impressive multi-bagger growth over a period of 20 months from rupees 50 to a peak of rupees 384, an appreciation of over 6 times. However, sentiments worsen soon after stock enters bearish territory and the free fall ensues. Gains of over rupees 220 built ever since August 2023 erased in the course of downward movement, a fall of over 57% from its peak. Sentiments turned negative largely due to poor performance over multiple quarters. Positive commentary on expansion projects in the MENA region rekindled hopes for a while but was not good enough to stop the continued fall in the share price. Market was literally aghast at the extent of fall in quarterly revenue for 4 quarters in a row, with major part of the fall occurring in Q1 and Q2 of FY26. Accelerated margin erosion, quite disproportionate to revenue fall, made the market play a bit too safe and the bearish phase got thereby intensified. Year on year fall in volumes of margin by over 50% in Q2 worsened the price fall. Intense competition in the domestic market took its toll on the company's profits. The strong operational surplus and plowback for capex practiced over years hit its bottom in H1 of FY26. Buildup of inventories and reduction in payables far exceeded an already depleted surplus from operations in H1 FY26, enhancing reliance on companies' external debt for both working capital and capital expenditure. The bearishness persists in the price level in relation to moving averages of 200 EMA and 50 EMA, and the price is firmly placed in a descending channel ever since October 2024. The bearish zone does not appear to be opening up any upward exit, at least for the near future. Price action data for 6 months from July 2025 highlights the unchanged downward direction for price movement. However, the silver lining is the fall in trading quantity during the period of every major price fall, suggesting sideways move to be more a possibility than any further collapse, which is a positive at the moment. Surprisingly, the price fall triggered by the pathetic quarterly figures have rendered the price earning multiple quite attractive as compared to peers, and the price touches a bottom which is below the book value of shares. However, market is quite cautious, still awaiting firm indications of any change in the direction of price moving upwards. A very diversified product range, strong and sizable promoter holding, overwhelmingly positive. Revenue pickup is not happening at surplus from operations getting diverted to fund growing net current assets, increasing borrowings and thereby raising interest burden. Margin erosion in H1 FY26 is not showing any signs of abating, putting extreme pressure on the bottom line. Technical parameters are yet to trace any signs of recovery in the very near future in what seems to be a sideways movement at its best. Hope you found this presentation on Jindal Saw Limited to your liking. I am Vittal Prabhu with the fortnightly video Stock Learning Simplified. You can access videos in the channel on the topic with a refreshing perspective. Your valued feedback makes all the difference and is most welcome. I respect your valuable time and keen interest. Thank you so much. This video is for purposes of information and education only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.